We will talk about price waves and I will avoid all those labels during the course. We were not talking about Elliott waves or Wolf waves. Those are all very fixed and very rigid. We were talking about any topic that we will cover later on. Whether it's price, waves, trend structures, highs and lows. But even when we come to the actual patterns, yes, they are called head and shoulders, cup and handle, wedges, triangles. But you will see that those are not the classic textbook patterns. Those are fluid, they change, and they always look different because of course. When you start looking at charts by yourself, you are notice that the market doesn't follow the textbook patterns that you have learned in textbooks. The market is always different. There are hundreds or millions of traders interacting every day on the markets. And of course, the way those traders and the way those humans and trade, it will make a difference in our charts. So, you really need to be open-minded and avoid all labor thinking, even if you have already some experience. I really recommend that you stick with me during those foundational videos. They are not going to be long, but they are very, very important for later on. So when we talk about price waves are really the building block of any chart. Pattern and price waves are the manifestation of how the price moves up and down. It is called waves for a reason because the market follows this rhythm. The price follows this rhythm of back and forth, up and down, and buyers and sellers control the waves. When the market is going up, there are more buyers. When the market is going down, there are sellers, and so on and so forth. And we learn later how to read those waves. Who is in control? How are the waves really interacting? Are the waves getting strong or weaker? How strong is the opposition to an ongoing trend? So if the market goes in one direction first and then goes just a little bit against the trend, what does it mean compared to a market where you have a trend and then you suddenly have a very deep correction? Of course, those are very different market phases or market forces. So here, this is how we generally will look at charts later on the candlestick. But here for easier visualization, some time to time like to look at line charts because you will exactly see everything that you need from a line shot right away. We have also trend waves, obviously. You can see here, the market is going up and going down a little bit. And then it's going up much faster. And then the forces are shifting here. Now, the market is turning into a downward trend where suddenly the waves to the downside is stronger. The waves to the upside are very weak. The wave to the downside are strong and then very weak upside and so on and so forth. And this really controls the rhythm of the market. And of course, I understand this is very, very basic right now, but you will see that very quickly we will go deep and much beyond this, just basic wave. So when we look at trends, I will always and often refer to primary trends, which is when you zoom out on a chart. You would see, okay, the market is moving from the bottom left to the top right. This is our primary trend. And within the primary trend, we have secondary trends. We have a secondary trend, goes up. We have a secondary trend with the mark goes down for a brief period of time. You will see that the secondary market phases to the downside are much shorter and the secondary phases to the upside, they are much longer. Only this way the market can move up. Within those secondary trends, you will see micro trend waves. Every secondary trend is made up of individual trend waves, obviously going up and down and up and down. And here's what it's going up. A little bit down and then up. And then here we have a shift in the buyer-seller sentiment so that the secondary trend will end and the trend will resume into its original direction. Of course, don't worry now. If this sounds complicated, if doesn't make any sense right now, it will soon make. Another example. Here we are first in an uptrend. Here the primary trend was up here. The primary trend was down. We will learn later. How can we spot those areas where the primary trend goes from up to down? Because those are the transitions. How can we anticipate those transitions? Because we need to be able to spot a transition when they happen so that we can position ourselves. Another very important point. A term that I want to introduce you is impulsive waves. Impulsive waves are the trend waves. They go into the direction of the trend, and we have correction waves to corrective waves. They go against the trend direction. So here we are in an upwards trend. The impulsive waves go up. The corrective waves go down. Here the primary trend is down. Then the impulsive waves go down and the corrective waves go up. So this is just another term that I want you to be familiar with because I would refer to impulsive and corrective from time to time. A final example about trend waves here. Once again, let's start here with the line graph. It is just a simpler, more simplistic way of looking at candlesticks. They show all the details of where the price is going up and down. What is the volatility? But if we just want to understand basic market structure, then we can follow the right line chart. And especially if you're new to trading or if you're just starting out with this training approach, I really recommend that from time to time, You switch to your line graph and you're just trying to understand what is really happening here. How are the market phases and how other waves behaving here? We see clearly. We have very strong impulsive of wave, very, very short, corrective wave, strong and impulsive wave. But this impulsive wave here is obviously much shorter than this one. And here as well. Here suddenly the market is becoming shallower and shallower. It is not able, or the price is not able to move higher as easily as it was here. It is struggling and struggling and struggling. Here we didn't have our final push, and then here very important. Suddenly the market and impulsive wave is so short that it cannot even continue to uptrend. This is one of those transitions that we will learn to read later. And there are plenty of transition phases and transition patterns, so that once we get into the module about setups and sharp patterns, you will get less than a dozen, but close to 10 different chart patterns that you will be able to trade. And then you will be able to really read all possible transitions, because transitions not only happen here at tops, but transitions also happen here or here. For example, here is a retest pattern, a trend continuation, a breakout, and there are many, many little clues that you can read from your charts. Now you might probably not know about, but once you really understand to read all those little microstructures. What is happening here? What is happening here? Why are we suddenly in a downtrend? Why are the impulsive waves now so strong to the downside? Once you read those, and once you are able to read those, you will be able to really become a fluent chart reader and really read all and trade all chart phases.